We're joined today by John Stover, Head of Tribeca Asia Credit Fund. John, thanks for your time.
Thanks for having me.
What trends have you seen over the last 12 months that have impacted your market?
Yeah, it's been a really interesting 12 months. So if you look at the end of 2022, the yield on the Asia High Yield Index was the highest of all time. So meaning the market was the weakest point ever. And really that was on the back of some issues in the China property space, which, we really didn't see any defaults or fundamental issues outside of China property. But at that point, the market was quite correlated because a lot of the long-only funds in the space had big holdings in China property and got big redemptions, and they had to sell everything else in their portfolio to sort of fund those redemptions. So what we've seen, over the past sort of 12 to 18 months is that the space ex-China has really rebounded. So we're seeing the market really trade back in line with where, not quite to where fundamentals are, but certainly much stronger than we saw in 2022. And we've seen there's been a lot of interesting opportunities on the back of that. We've seen a lot of companies buying back their own bonds. This is, across Southeast Asia, India, Macau, Australia, because they're producing free cash flow, they have access to alternative forms of finance, and they're buying back their cheap US dollar bonds. So that's a lot of what we've done over the past year is looking for opportunities in and around those buybacks on the event-driven side. So the market's sort of come back to a bit more of a normalized level, but we still think it's quite attractive on a yield basis at this point.
And what are you seeing with investor attitudes in Asia?
So investors, if you look at, I think they're starting to come around to the idea that Asia isn't just China, right? There's a lot of really interesting economic stories happening outside of China. And, I think investors in this region understand that. I think if you speak to investors outside of Asia, whether it's in the US or Europe, they sort of just think of China when they think of Asia. And, obviously with trade war, et cetera, and geopolitics, people have gotten quite concerned about China. And so what they've done is they've just sold their entire Asia holdings because they're worried about China. But I think the really interesting thing is that when you think about trade war, that's obviously negative for China, but it's actually a benefit for the other countries in the region. So, manufacturing moving to Vietnam, Thailand, Indonesia, for instance. So that's a benefit for those countries economically. But from a markets perspective, often you see those trade down in line with what's happening in China because, global investors just want to reduce their overall Asian exposure when they get worried about China. So that creates a lot of opportunities for us because really what we look for is when market prices move in the opposite direction as fundamentals. And so that's clearly been happening over the past 12 to 18 months and create a lot of opportunities.
From an opportunity point of view, so what you're seeing is there's China, rest of Asia. It shouldn't be lumped together.
That's right, yeah. And that's, look, obviously there is some correlation. China's a big player in the market. But if you look at what's happening in India, for instance, highest PMI in the world for a country of that size, Southeast Asia, if you take out China from all of Asia, that's still a market that's about as big as the US economically, right? So, and if you look PMIs, if you take out of China, it's largest in terms of on a regional basis globally. So actually things are doing quite well. Southeast Asia, Japan's going through really a once in a generation corporate governance and shareholder return story. So there's actually a lot of exciting things happening, and I think people need to actually sort of understand that nuance and dig through things in terms of understanding the different trajectories behind the different economies in the region.
And how does the interest rates play into this?
Yeah, it's been quite a ride. Obviously, you saw, the Fed move from almost 0 to 5.5% in less than 18 months, which was the sharpest rise ever. That obviously had a big impact on our market because most of what we do is fixed coupon. So that obviously is a negative impact for our market. But what we've seen over the past 6 months, you saw US 5 to 10 year yields top out at 5%. You're now trading more like 4.2%. And so I think what's happened, when we talk to investors and what we're seeing in the market is everyone was crowding in cash over the past 12 to 18 months because you were getting 5.5% risk-free on your bank deposit, for instance. Now what we're seeing is as those longer term rates have topped out, you're starting to see interest rate cuts on the horizon. People are now understanding that they have to go a bit longer duration, right? So we've actually seen a lot more interest in moving further out the curve, buying 3, 5, 10-year bonds, and I think that's obviously going to be helpful for our market. And I think we're starting to continue to see as people have to roll over their term deposits at lower and lower rates. There's going to be continued demand on that front.
What will the Tribeca Asia Credit Fund be focusing on this year?
Yeah, I think it's a bit more of the same. So we're still quite bullish on Southeast Asia, India, and the opportunity set in Australia. China is a fairly small part of what we do. We're still not looking to take a large position there. We still think there's some risks around that, both from an economic and geopolitical standpoint. And so, yeah, but we try to be opportunistic, right? I mean, we try to look at, where we can't sort of have a crystal ball and sort of predict where the next opportunity is going to come from. But we try to be nimble and opportunistic and just be ready when the opportunities come.
Nimble, opportunistic, and ready for when the opportunities come. Exciting times. We're going to look forward to speaking to you again in a year from now. John, thanks for your time.
Thanks very much, David.